May profits be upon you. Welcome to another weekly Forex forecast. You are trading with RT Money, and I am very happy to see you. All right, thank you for watching, and make sure you don't forget to hit the boost button, hit the thumbs up button, because that helps my channel to grow. All right, so that's all I'm asking. For the free content, just hit me hit me on the likes and the and make sure you subscribe so that you can receive direct notifications of my updates, because I give updates throughout the week. All right, let's move on. Now, we have an interesting week ahead of us. Let's take a look at the economic calendar. And what we can see is that on Monday, it's a bank holiday, Martin Luther King holiday. It's a federal holiday in United States, and the banks will be taking a holiday on that. And more very important, this is the inauguration day that Trump chose. All right, on MLK Day. All right, to take his oath of office and all. And what I'm looking for is a Trump pump. All right, if you look at 2016 on his inauguration day, from that point, the U.S. dollar started to move to the downside. And the 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 Dow, the NZDUSD, the equity market started to move up, and that's what I'm looking for this year. All right. Also, the rest of the week we can see that Wednesday there's no red folders, so be careful on that day trading, because it's going to be lower volume, and with that we can see some herky jerky type movements, and they're hard to predict, and it's a rough environment sometimes to trade in. All right. Thursday, good red folder days, but the most important thing we want to take note that the yen is the Bank of Japan will likely raise the interest rate, which will again boost the Japanese yen, and they will probably outperform the yen will probably outperform the U.S. dollar for sure, and you want to make note of that. Okay. And Friday, you can see some red folders all the way around for the different countries and all, including the U.S. So it's going to be a good week for trading. All right. Now, I want to point something out real quick. All right. 2016, the last inauguration day for Trump, you saw on the Dixie of the U.S. dollar index, the value started to pull back. Right. That's about a 7% drop. All right. A few months down the line, around December of that same year, you saw it take another, after a push higher, it took out the lows, and I can't even tell you what that was. That was a decline of, wow, look at that, almost 15%. Yeah. So, and during that same time, if you look at the equity markets like the Dow, 2016, need I say more? This was his inauguration day. This is the Trump pump, and we're looking for that this year. All right. And we have some confluences. Let me go to the Dixie chart right now. I've been talking about this for the last 3 weeks, that the US dollar broke out above these highs. All right. Broke out above these highs and traded into a rather large area of supply. All right. Here we are for the last 3 weeks. I've been talking about it. You've been watching my videos. You know I've been on it. All right. I don't like this color. Boom. All right. That's better. All right. Okay. Now, what I've been saying, the U.S. dollar may be strong in the near term. All right. In the shorter term, but there's a longer term decline that I feel getting ready to happen, and it just so happens to coincide at the same time it reaches this supply zone and the inauguration day Monday. So I'm expecting a pullback, and I am also expecting that to be a longer term pullback, maybe down to this low. All right, we'll probably come back to the breakout area. All right, to this area of demand, and we pull back and then continue higher. We'll see. we'll see what happens, but I am expecting price to round over. If we go to the daily, you can see marked out how price has stair stepped. I don't know why this one is marked. Boom. All right. I don't know what just happened there. If I can just get it together, that's what I'd like to do. All right. So you can see how price made the higher high, higher low. Oh, I'm sorry. I went a little ahead. I made a higher high. This is the lowest point. All right. Price created this low resistance liquidity over here. All right. Made this higher high, made a higher low, a higher high, a higher low. All right, we came into contact with this the supply zone. I'm looking for price to turn over. If price takes out that high, that's fine. That's fine. We're in a longer term since 2008, been moving higher. We're in supply. I'm expecting this the top to come in. I'm not predicting a top. I'm expecting price to start to round over. All right. If we take out that high, I'm not interested in buying the U.S. dollar at this point. All right, but if we take out that high, that'll that might trigger the pullback. But we pulled back into demand here. All right, and we had a rally on Friday. What is that rally going to mean? I don't know. All right, are we going to rally past this high? I'm keeping my options open. That's all I'm saying. All right. I don't want to buy into supply, into this big supply. I don't. All right. I'm just reluctant to until I see breaks of structure and whatnot. All right. We haven't seen a bearish break of structure yet, but if we take out this low, that might uh, that'll put me in a bearish mood. I'll tell you what. But I will be looking for a double confirmation. I'm looking for a low to be made first, price pull back into that bearish leg, and then another low taken out. That's what I'll be looking for. When that pullback comes in, I'll be there for that. Got it? Good. All right. I hope I didn't take too long on that. All right. The euro. Euro's just the opposite. Okay. Of the US dollar index, we can see that price did take out our lows. Boom. All right. Comes down, pull back into supply, then takes out another low. This is all bearish. Until we see a bullish break of structure, there's no reason to be looking for buys. I mean, for buys. That's right. But if it takes out that low, that high, all right, don't panic. This isn't the protected high yet. It becomes a protected high when this low is taken out. I hope you catch what I'm saying here. All right. What we're talking about is basic structure, fractal structure, uh, in this case. Okay. When this low was taken, God dang it, man. I keep trying to pick another color. All right. When this low was taken, this became the protected high. All right. Price pulls back like so into this bearish leg that broke structure. All right. What you want to see is it hit a bearish fair value gap or a supply, an area of supply. All right. And then you see the turnaround. You see the shift in the market. We haven't seen a bullish structure shift yet. All right. This is a structure shift when it breaks uh, a low. When it breaks the low, then you're expecting another low to be broken. So this looks like it's the lower high, low, lower low, lower high, lower low, lower high. This looks like it could potentially be the lower high. We'll see. But until this high is broken, sells all the way, baby. All right. If we look at the pound, we got the exact same situation. All right, an important low taken, an important low to target. Got it? And you can see Friday was very bearish. We're heading towards some low resistance liquidity on these lows. A good reason for price to come down and sweep those lows and take out our sell side target at that critical low over there. Does that make sense? I hope it does. The Aussie dollar, very similar. Okay, you see these lows. You see the lows that were taken. When price breaks structure like this, you expect a pullback at some point. We took out this low here, and this is our next target. All right, it may not get down there because the pullback is overdue. A more significant pullback is overdue. All right, but we have the same situation that we just went over with the euro and the pound. All right, we have a break of structure. We have the buy up and a bearish leg that breaks structure. This becomes the protected high. All right. And we see the pullback into this bearish leg. And what we find is a fair value gap here and an area of supply here. Two confluences that will say price is probably going to turn down. This is likely to be the higher low. I mean, not the lower high, I'm sorry. All right. Lower high. Sorry, lower low. Doggone it. Lower high, lower low, lower high, lower low. That's what we're looking for. All right. Until price breaks structure to in the other direction, which is this protected high, we're going to be looking for sells. Period. End of story. This should be our next target. All right. This will be the more immediate target here. Okay. Boom. All right. If we go to the New Zealand dollar, all right, very similar situation. All right, we have the lows. All right, you can look left and see we took out a low here, took out a low there. All right, very good. All right, is price getting ready to turn around? We're not going to anticipate a bottom. We're going to keep taking sells until we see a break of structure to the upside. What did price do? Price, if I can turn that color around, all right, and get it a little thicker. All right, thank you. That's all I wanted for Christmas. Okay. You see the buy up before the sell down, right? We broke structure to the downside. This becomes the protected high, right? And price pulled back into this bearish leg of structure. I need another color. All right. Let's see. Yeah, I like this one. All right. So this looks like it's going to be the lower high. Got it? Lower low, lower high, lower low, lower high. This looks like it's going to be the lower high. Until it breaks this low, we don't know yet. It's still developing. But you see how price found the fair value gap here and held. No closes above that fair value gap. And this is in an area of supply. Got it? Came up, took the supply, ran into supply and reacted like it's supposed to. So I'm looking for price to come take those lows. That's the expectation. This will be the first target, the more immediate target. And then we have another target down here to take that low. And once that low is taken, guess what? We got a new protected high here. Come on, man. Why would you do that? All right. We got a new protected high here, period. All right. And this, once we get price to break that low there, then we're going to be looking for price to come back into supply, which will likely be here. All right. Once we get that, we can start to look at that as a possible lower high, right? If we go to the Canadian dollar, I am bearish on the Canadian dollar as well. Why? Because we're in a consolidation for the longest. Look at this. This is the COVID crash low, all the way over here, 2000 and March of 2000. All right. 2020, I'm sorry, March of 2020. And you can see we have already taken that low. Very interesting stuff. Come on, man. Get me out of here. So if I can't make these things disappear for some reason. All right. That's because I'm not on the ends. Okay. All right. So with this demonstrative break of structure to the downside, we left a fair value gap here. All right, but this is a breakaway gap. Why? Because in the 3 candle configuration of a fair value gap, this one, this one, this one, these, this, the the third candle closed below the low of the second candle. That means the fair value gap is a breakaway gap. It's not expected to come back here. All right. So we're looking for price to form another fair value gap from here to wherever the new candle opens up on Monday and closes. We're looking for that fair value gap. So price could use that fair value gap to go lower. Right? Easy as that. Right? We're looking for a pullback from here. Looking for a pullback to the breakout area. I got a little dotted line there or here. In this area, I'm looking for that pullback to happen. All right. Once it forms a fair value gap, it could use the next one to go lower. Okay. US dollar CAD, similar situation. It's the same situation, but just the opposite because this is US dollar CAD. CAD futures are CAD USD. Uh, the FX brokers have it as USD CAD, you understand, as the primary. All right, US dollar as the primary. So I'm looking for the exact same thing, just the opposite. I'm looking for a fair value gap to develop somewhere around here. Look for the Monday candle to open, pull back, and then push up to take this high because it closed higher than the previous high. That's the next candle theory. If it closes higher than the previous candle high, then you expect that new high to get taken at the very least. It's going to we're going to take that high, no doubt about that. All right, and I'm looking for price to pull back, turn into a wick, and then push higher because the ultimate goal in the USD CAD is up here. Why? Because if you pan out, you will see these old highs, and I don't see price not coming up to meet those highs. Look how far we've come. Very bullish all the way up, and we're projected to take that as I'm projecting up here to that's where we're headed. Now, how do I get that? I just want to do that real quick for you using the what do you call this thing? The Fibonacci, the extended what do you call this thing, man? The trend-based Fibonacci extension tool. All right. If you look at it on a weekly, this is what I do. This is what I do. All right. Take the low to the high to the next swing low. Move this all the way over to the side. All right. I look for the 80 and the 100%. We're coming close to the 80. Here's the 100% of the trajectory. All right. I like this number 1500 because it's round, but this is we're at the top here is the 80%. I think we're going to hit that for sure. Hope you were able to keep up with that. All right, let's go to Swiss futures. This is CF Swiss franc. All right, Swiss franc USD. All right, I'll show you the USD Swiss franc next. All right, but we have been weak, been falling. There's no reason to look for buys until we see a significant break of structure to the upside. All right, this is the weekly, and you see how last week ended it as a doji. And God dog it, man. You see how price has been bearish, and we see that we have this bearish leg. We pushed up into the supply, and now we're heading down. This would be the next target, and this is my further target for the week. All right, we are bearish, and I'm looking for more bearishness to come. All right, if we look at the US dollar, Swiss, it's just the opposite, and we hit our targets last week. That's what the circle is for. Yay! All right, and I believe that prices be going up here. All right, from here. This is the bullish leg. We came back into it. Now I'm looking for a higher high. If we go to the Japanese yen, real quick, prices coming down to a bullish fair value gap, and I believe that we're going to go up from there. All right, pull back, a short-term pullback, and then a push higher on the US dollar, Japanese yen, a push up, and then lower. All right, we're already headed that way. Got it? We made a low, a lower high, a lower low into this demand. Thank you.